Hello everyone, welcome back to another trading session. Look at this terrible entry right now. Man, it always happens for me. If this goes up, I will just enter one more, and this is a very beautiful third touch breakout. See, third touch is breaking out, plus it's breaking a doji, so this is also a doji break. We have two major reasons to take this trade, plus we have candle closing on common point of rejection. Okay, that's why it's dropping pretty strongly. It's dropping pretty strong, and it's going to be a winning trade for sure. But today's video, I will try to take every single trade with margin of safety. Ignore this one. This doesn't have margin of safety. But yeah, from the next trade, oh my god, it was 40%. What a scam. Okay. Yeah, I will talk about margin of safety and why it is so super important. Let's just take a trade with margin of safety, and then I will explain what that is, okay? I will wait for it to come down. Okay, let me just take this one. All right. Margin of safety means we create some safe area for ourselves, and we can cover our mistake a little bit, okay? Let's say I go with the bars on this candle, right? And I'm expecting a green one. But I wait for candle to come the opposite side a little bit, okay? Then I enter the trade, okay? This way, even if yeah, it was a great example, man. Even if it closes as a red one, okay? But we still win the trade because our entry is way below there, and it's kind of increased the chance of winning. So basically, if the candle is opening here, imagine this is the candle I'm talking about. The candle is opening here, it plays, goes up, goes down. We're expecting a green one. But if we enter immediately on the candle open, you have to have the green one, or you would just lose the trade, okay? Even if you have this kind of candle as a red one, you still lose the trade. But if you wait after the candle opens, you wait a little bit, it comes the opposite direction, just like what we did here. You can go back and watch this again. It's gonna play, right? Every single candle is gonna play. Don't ever FOMO. Just wait for it to come down opposite side, enter, and then it's either gonna go way more higher or just gonna close as a red one, and you still have higher chance to win the trade. I'm not saying you're gonna always win. It depends how you use this, but it increases your chance of winning. If we were taking the trade immediately, we would lose this trade. But now we won the trade. This is also a double doji breakout, and my entry was below this common point of rejection. So it doesn't mean that, oh, I can just wait. The moment it moves a little bit, I can just enter, and that's a good trade. Of course not. You have to have some roadblocks in your way and put your entries below or above that roadblock. For example, in this case, we have this demand area right here, which is demand area somewhere the buyers are, right? And if we break this doji on this candle, what is the roadblock that stops the price? This demand area, see that? It stopped the price. So we're not just taking trades everywhere. We wait to see something. For example, if there's a round number, let's imagine there's a round number, this yellow line. We have to wait for it to come below that round number. Then we put our entry right here, would be right here. This way, round number is going to act like a defense wall for us, so the price doesn't drop below our entry. This is called entering the trades with margin of safety. I will show you more examples, right? Let's just go to the next chart. I will try to show more examples because this is very simple yet very important for at least for beginners, just to have higher chance. I know sometimes there will be some missed opportunities. Oh my god, look at this. Let's take this trade. This is a huge gap down in the favor of buyers. in the demand area. Demand doesn't cause any breakout, so it's not super strong. But yeah, so if I want to take this trade with margin of safety, there we go. The second entry is with margin of safety. It seems that we're going to lose both of them. It's going to be a disaster, but no, this is a huge gap down. Huge gap downs, if you have enough reasons, they mostly react in the last couple of seconds. We'll see. All right, so the second one is entering with margin of safety. The first one is entering with FOMO and without the margin of safety. Let's see what the result's going to be. Oh my god, it closed right on our entry. All right, it gave back the money for the second entry. That's a good example, man. I don't know how these examples line up right when I'm recording the video. Anyways, yeah, the second entry, did you see? It has a little bit of margin of safety, okay? But the first entry was out of FOMO. Let's just enter right now. We don't want to miss this opportunity. Let's just enter right now with this mindset, okay? It's called FOMO, fear of missing out. But the second one has a little more patience on it. Let's just wait for it to move forward to the opposite direction. Then we enter in case. Now you see the results. Look, the first entry is a losing trade. The second entry, it gave back the money. At least it's not a losing trade, right? Which one is better? Of course, giving back money much better than losing a trade. So you saw a live example of it right now. We will just show more and more examples, but you need to make sure do not trade this blindly because you have to have a setup first. You have to have your roadblocks, something to rely on for entering. All right, let me just see. There's no setup here. All right, the market has been moving inside of this price channel and now it's broken. So I have to look for some sell setups. There was also a third touch breakout. Yeah, this is another example. Let's see. Exhaustion candle, third touch breakout. But this one, it didn't go opposite direction. If we were going to sell this is a sell setup. It didn't really go up. So if we were waiting for margin of safety here, we would miss this opportunity. And that's the thing, right? So what I'm trying to say is you never want to be mad because of missing some opportunities. Because, you know, the market is always there. It's going to be like this forever. Like, of course, you're going to miss some opportunities, right? You cannot be mad. And we have this basic market structure right here. Most likely, the price will react from this area and go up. And that's a good entry now if I want to take this with margin of safety. But since I don't have any setup right here, I'm not taking it. I don't have a setup, but the market's direction is upward. Let's just see. Some people ask, what is the best time for trading? And I've answered this multiple times that there's no such a thing as best time of trading. That's absolutely, I mean, that's not a question, man. What do you mean, what is the best time? There's no such a thing at all. The best time is the time you feel comfortable starting your trading session. The best time is you look at the charts and you see a lot of winning trades. For example, you see this one didn't work, this one didn't work. You decide, I'm not taking trade on this chart. Let's go to the next chart. All right. I see something, but I will try to take it with margin of safety. Let's see. The next candle, I'll go with the sellers for the next candle, but I'm trying to add up my setups and I will take it with margin of safety. So I will wait for it to go up a little bit. Okay, I take it one here and I will take it one more up there. because I want to see what we have in the lower. Yes, we have room to go up. Yes, so yeah, we have a little bit of more room to go up. If it goes, go up. Come on, man. All right, I take my second and third entry in this one. So look at this one carefully. This is a supply area, right? And I took this trade. If you look at the previous 20, 30 candles, you will see that we have maximum 2 green candles. We don't have 3 green candles at all. Look at this. So I enter with margin of safety in the seller's favor. You see, the first entry is much riskier compared to the second and third one. And like I said, we do not trade based on only one reason. I'm trying to stress this enough because I see people taking some random, absolutely terrible trades and claiming there's so many reasons, but there's not. Man, please find your setup. Use margin of safety. I don't know if that was clear explanation. I will explain one more time for those who didn't understand. So basically, you have to have a setup first. Okay. In this case, we have a minor setup, which is market sequence, not having more than 2 candles on previous 30 to 40 candles. Okay, if you count. Then we see that, okay, so we have this price channel. It's pretty small and it's broken right here. The price channel is broken right here. So what is the cause of this breakout? Look at the chart. What is the cause of this breakout? Supply and demand. Boom. Supply is here as a cause of this breakout, this little breakout. So if you go to the lower time frame inside of the supply I marked, you'll see this one. You'll see this one. Boom. So the entry is here, this blue zone. So we just combined margin of safety, the entry here, right? The entry right here. Margin of safety, market sequence, and supply and demand, lower time frame entry, and market's direction. Right? Market's direction. This is how we want our trade look like. Everything in our favor. Most of the things in our favor. We cannot always make everything in our favor. So there's no perfect trade. There's no perfect time for trading. There's no perfect broker for trading. There's no perfect pair for trading. It's always the same. Everything is the same. There's no best time. You can trade every time on the day. Some people like to trade on midnight. Some people like to trade on morning. The charts always look the same, for me at least. Okay? Thank you for watching, man. Don't forget to join the Telegram channel. The competition announcements will be starting soon. And this time the prize is even bigger. It's free to sign up. Thank you for watching, man. Peace out.